Hey, good afternoon, everybody. Going to go over our Forex trades for today, Thursday, March 17th. Didn't trade yesterday because of the Fed day, Fed announcement on interest rates. We'll touch that based on that in a second. We did have 4 trades from last night and into this morning, which we liquidated. One was a correlation trade between Euro CAD and Dollar CAD, and then 2 were directional trades. One was in Aussie Yen, one was in Euro Dollar. So we're going to go over them in a second. First, so I want to talk about what the Fed did. They didn't raise rates. They left things unchanged, which was pretty much what everyone expected. But they did downgrade the economic outlook to soft. They also say exports are remaining soft. They also downgraded the number of rate hikes for 2016 to just 2. From the last meeting, they were saying they expect to raise rates 4 times throughout the year. So obviously those things look very bad. The rate hike odds for April plunged from 27% to just 9.8%, and even June odds for a June rate hike are back below 50%. So pretty much, not that we were all that surprised. The economy's gotten soft. I would be surprised if they could even pull off two rate hikes throughout 2016. They'll probably do one just to try to save credibility, and then I wouldn't be surprised to see them reverse course and start cutting rates and like all the other central banks are, right? Yeah, Japan the other day, they're negative interest rates. ECB's, we discussed that the other day. They went more negative and they increased their QE program by 20 billion euros a month. So the Fed is trying to push back. And it's almost like they're trying to push back on a string. And you know what happens when you push on a string? Nothing. The string collapses. So not looking very good there. What else? Just trying to see if they really said. They really didn't say a whole lot. I mean, that's the bulk of it. Now, of course, markets around the world rallied. It's amazing today's day and age. The more negative or the more bad economic news is, the higher markets want to rally around the world. Amazingly, which makes no sense. It's just because the markets around the world, from bond markets to stock markets to currencies, are addicted to central banks. Just like a drug addict, or even you could relate it to someone in the hospital who's is on this intravenous for whatever reason, and you can't pull that intravenous out because their body needs it so bad. It's the same thing with the economies around the world. They're so addicted to central banks and central planning by those banks that the weaker economies look, the better things seem for investing, which boggles my mind because it's complete opposite of what things are supposed to be. But anyway, let's get to the trades. First one we're going to look at is a correlation between Euro Canadian and US dollar Canadian. They're highly correlated around 90% of the time. They became uncorrelated because of what happened yesterday with the Fed. We did have 15% of our normal size in Euro CAD. We had 20% of our normal size in Dollar CAD because Euro CAD is more volatile than US dollar Canadian dollar. So in Euro CAD, we were long 1.47165. This morning we sold at 1.47219. Picked up 5.4 pips. Adjusted for size, 0.8 pips. Basically a push on that one. But we were short the US dollar Canadian dollar, again correlated with Euro CAD. And this one paid off very nicely. We were short 1.31174. And this morning when we covered the Euro CAD, we covered the US dollar Canadian at the same time. And we covered it at 1.30104, picking up 107 pips, or adjusted for size, 21.4 pips. So really great trade, just a matter of, a few hours from late last night, around 9 o'clock at night on the East Coast, till about 7:30 this morning on the East Coast. So really nicely done there. Aussie Yen, this was a directional trade. We were long from 85.469. This little pullback just didn't hold. It didn't hold the 85 level and bounce, and you can see what happened. We had our stop at 84.749, which got taken out early this morning, losing 72 pips. We had 20% of our normal size here, so it's equivalent to 14.4 pips. Not the worst thing in the world, not the best thing in the world either, obviously. And in euro dollar, we were long this from 1.12552. We had our order out there. We got hit overnight, and then we had our order to sell just before the figure. Unfortunately, this happened around 4:30, 5 o'clock in the morning, so we got taken at 1.12920, picking up 36.2 pips. If it happened a few hours later, we might have been able to piece out of this and capture a little bit more profit there, because you can see what it did. It ran all the way up to 1.13, let's call it 42. So, we could have sold some where we wanted to and then see what happened as it got to the figure and give it some time, and it would have paid off very nice. But again, unfortunately, this happened about 4:30, 5 o'clock in the morning. So again, adjusted for size, that was 7.3 pips. So in the end, picked up 15.1 pips after those 4 trades on a size adjusted basis. On a non-size adjusted basis, it was 76.6 pips. So we'll take that. We would take that every day if we could. Anyway, so that's it. We're going to move on. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And have a great rest of your day.